Hello and welcome. My name's Chris Cann with Mining Journal, and with me I have Barton Gold Managing Director Alex Scanlon. Barton listed in June last year with a portfolio in the Gawler Craton of South Australia, built around the infrastructure of the historic Challenger gold mine with a regional exploration land package. Hi Alex, welcome.
Thank you for having us.
My understanding is your first priority has been to build on the existing 1.1 million ounce resource that you have regionally and specifically in the historic infrastructure. You've done that since listing, conserving quite a lot of cash, which I'm sure shareholders have appreciated. In the current inflationary environment, how confident are you that you can keep up that track record?
I think we're pretty confident. One thing that's kind of interesting in our case is we're fairly unique in the fact that we have all of this infrastructure, and with that comes a lot of surplus equipment and assets. So one of the things that we have, for example, is quite a large camp infrastructure, quite a large mill infrastructure, secondary equipment, surplus parts. So the inflationary environment that we've encountered in some ways has actually been to our advantage as we are systematically disposing of some of these surplus assets. So we've been able to monetize, for example, a minority portion of that camp for about $750,000. That gives us a lot of free cash in probably a quantum that we normally wouldn't be able to realize but for the inflationary environment. So as we go on, we'll continue to be focused on very efficient in-ground expenditure, but we'll continue to offset that expenditure with additional sales and income.
Okay, and what is the current cash position?
We had $11.2 million as of the 30th of June, so very, very well capitalized.
Okay, and you've talked about the past producing assets, but the real opportunity that Barton has identified has been that regional land package. It's been trodden for quite an extensive period of time. What have you turned up? What have you identified as a company, as a geological team, and what does the real opportunity there from an exploration standpoint look like?
Yeah, one of the really interesting things about South Australia is that it is extremely well represented when it comes to gold mineralization. So it actually has about 25% of Australia's known gold resources, but only represents about 2.5% of production. So that right there might suggest that the area would be well trodden, but historically for the past 30 years, it's actually sort of been left behind. Going through the mid-90s, there was actually sort of a gold rush of interest in South Australia. Two of the assets and two of the land packages that we now own were essentially discovered in the end of 1995 and early 1996. So that was both the what became the Challenger mine and also the Tunkillia project. Those were discovered within 6 months of one another. Everybody got very excited just in time for the gold price to crash at the end of the 90s. So from that period of time, what was really interesting is that everybody sort of left gold from an exploration or expenditure standpoint. But when gold exploration came back, everybody was very much focused on Western Australia or the eastern margins of Queensland. The interest in investment never returned to South Australia, which in our review left a very large opportunity to go in and actually pick up a lot of historical data. Some very interesting ground. We've acquired substantially the majority of all historical producing or significant exploration ground. And then apply new technologies. So we have sort of a 30-year technology gap, apply new technologies and rapidly accelerate the ground. And that's really what we're focused on doing now.
Seems quite unusual that people haven't gone back to South Australia. South Australia, in our experience, has been one of the more proactive governments or bureaucracies in terms of attracting investment into resources exploration and development. What's your experience been like, and what kind of incentives are there?
Yeah, correct. Look, we agree. It was quite surprising that it wasn't sort of, the space wasn't repopulated. What we found is that the South Australian government is an excellent partner. So they have encouraged us quite aggressively to sort of come in and invest aggressively before we decided to sort of make a strategic play in this region and sort of really with the objective to reanimate the entire Gawler Craton. We actually sat down with the government and said, what are your objectives in this region and for the state? We got a really good understanding of what they were interested to see happen, which largely conforms to our vision of sort of reconsolidating and redeveloping that whole district. In the time since we've been in the state, they've given us a long number of concessions. We have a new mine concession for Tunkillia, which reduces our state royalty rate for a period of about 5 years. We've also received grants under 2 rounds of the Accelerated Discovery Initiative. So this is a program that evolved from what used to be called the PACE program, where the South Australian government has been actively providing co-funding for exploration to encourage not only exploration, but essentially innovation in exploration, so the trialing of new technologies and methodologies. So in the last 15 months or so, we've announced nearly $1 million in grants from the South Australian government, about 900,000 of which relate to this Accelerated Discovery Initiative, and another 80,000 of which actually relate to a South Australia landing pad grant, where they actually did encourage us and provide some co-funding for us to come and reestablish a new headquarters in South Australia. So we found them to be an excellent partner, and I think we have stepped into a very significant opportunity that probably was there for the taking for any number of other people.
So presumably the government would like to see operations restart. There must be some shareholders that are sat there who would love to see some operations restart, some de-risking from that perspective, as opposed to being a pure exploration play. Why not look to immediately restart operations, get some cash flow going, do some toll treatment, and then be completely tooled up and funded to go and do that massive systematic exploration program on a regional basis?
Yeah, very good question. I think most of our investors are sort of long-term experienced investors in the resources sector, so whether from a project development standpoint or even services provision. So they understand that projects are projects and it's not sort of a quarter-to-quarter thing. What we are focused on right now is exploration, and that's broadly at our Tarcoola and Tunkillia projects. And the reason is that the work that we did pre-IPO, so before we IPO'd, when we acquired this, all of these assets, we spent a very significant amount of money actually doing technical work that people would normally leave until after they IPO. We actually increased the mineral resources of the Tunkillia project from about 560,000 to about 960,000 ounces. We did all sorts of new geophysical studies over a number of the projects. And the idea was to demonstrate, one, the premise or the thesis that what were previously understood to be relatively smaller constrained project areas probably are much larger footprints. And so we're going out and systematically building those footprints. That is the exploration overlay. And then where that goes to the production strategy is, it's very, very tempting, of course, to say, hey, we've got a mill that we can recommission, and we've got a shallow open pit that was producing over 3 grams per ton during 2018. We found extensions to that pit. We think that we will actually create multiple repeats of that open pit in the vicinity right there on the mining lease. But the idea really is to do what a lot of people don't do, is just stop, take a breath, step back, and focus on the large-scale exploration, because what we want to do is map out a pathway to genuinely large-scale production. That requires large-scale exploration and developing a really systematic development pipeline. What often happens when people rush into operations thinking we'll do small-scale production and we'll use that to bootstrap our way to larger-scale production or growth is commissioning a project, operating a project requires a tremendous amount of focus and time. And what usually ends up happening is that actually handicaps the ability to look beyond just managing that operation. Okay. So we want to develop the larger plan, but once we have that, it does give us the ability to say, okay, we have, and our ambition is to put together a few million ounces of resource in what we call our southern hub between Tarcoola and Tunkillia. That would then give us a pathway to a much larger production base. Once we have that sort of mentally clear mental picture of that, we can then bring forward what we would call stage 1 operations. Okay. So we can leverage that infrastructure. We can utilize mineralization, whether it's around Tarcoola or around the old Challenger mine, around our central Gawler mill. There are some remnant mineralization in the underground Challenger mine there. We have minority interest in joint venture resources within about 40 kilometers of the mill, and there are other projects as well that will likely require toll milling. So all of those are sort of stage 1 acceleration opportunities where we can then go into operations, however, already knowing this is what we're doing and not trying to sort of start operations and plan growth at the same time.
Okay, and what's the time frame that investors should be looking at for that exploration phase and then that potential accelerated phase to production?
If we kind of work backwards, like from the large scale operation standpoint, our objective as a company is to be South Australia's leading independent gold producer in 5 years. So that would mean producing north of 150,000 ounces per annum. And that would be from a combination of Tarcoola and Tunkillia predominantly. Again, as we think we'll get to a fairly clear roadmap from a mineralization standpoint towards that objective. And then you get into studies and these sorts of things. But if that's our 5-year plan, we can then sort of think of, okay, well, maybe our stage 1 plan coming forward is 2 or 3 years to have a really robust stage 1 where we know we're starting operations producing, X thousand ounces per annum. And then the growth towards the full-scale plan happens between years 2 or 3 and year 5.
Okay, what do you see as your biggest risk that you have to manage in terms of making that a reality?
I think there's probably 2 of those. One is geological risk, right? So, we have a number of theses. Thus far, we have validated every single thesis that we set out. So this went back to the work that we did pre-IPO. Our prospectus is very clear. We think this. We think there may be repeats of this mineralization here, here, and here. Since we've IPO'd, we found 4 new gold zones where we thought we might find new gold zones. And the work that we're doing continues to suggest further repeats of that. And so we're building, but while we had a very good track record thus far, you're always at risk that the geology isn't going to do what you want it to do, right? And a lot of what we're doing is based on using new technologies. So in a lot of our programs, we're actually essentially testing technologies from an R&D perspective as well. That's worked out well, but there will doubtless be things that don't work. So geology risk is certainly one. And then the other one, of course, is market sentiment risk, right? We have to, we can keep doing very good work, and we are doing very good work. We're using our capital in a very, very cost-efficient standpoint. We're restocking capital through corporate initiatives while sort of strategically destocking it through exploration. But momentum in the market is one of those things that is actually quite necessary, helpful, but certainly necessary to taking those next big steps. So we're working to make sure that we can keep generating capital internally and make sure that we can keep progressing what we need to do and be prepared for when the market is ready to support a big jump forward.
Alex Scanlon with Barton Gold, thanks very much for your time.
Thank you for having us.